All right, everybody. This is Chris back here, swing trader with Gavin, and we're going to be going over some charts, doing a technical overview, looking at some macro asset classes, individual names, and whatever else that everybody would need to look at.
Yeah, so Chris and I are still working out all the logistics that we plan on doing for this show, but Tuesday is definitely going to be our macro day. Thursday, we're planning on running another show that will kind of view more some of the earnings coming up. There will not be a show this Thursday for what it's worth. It's on me. I'll be wrapped up with another podcast and traveling, unfortunately. But we do plan on running this on a regular basis. Once earnings season breaks in, we'll talk a lot more about some of the earnings reports coming up and everything like that. But I'll basically be Chris walking you through the charts and me just kind of providing some fundamental backdrop and some thoughts as well on it. But yeah, had last week's one. I think it was pretty helpful hearing what Chris has to say about some of the charts going on, and that's what we're going to do right now, Chris. And
Mm-hmm.
we're going to start off with taking a look at the S&P first. We're going to basically just kind of run through the different indices and get a sense of what Chris is seeing over short and longer time frames here. So, Chris, what do you want to look at? The SPY here?
Yeah, we can start off with the SPY. Have it up.
Yeah. So, why don't you give us a sense of what you see going on at the moment?
So we're in a bit of no man's land on here. We're testing the current ceiling that I was talking about last week from 750, 670 down to about 740, 675. We're moving sideways. This weekly trend is still moving higher overall, but we are consolidating over here. And it's a question of whether or not we're going to break higher, break above resistance, and put in another impulsive leg higher, or are we going to correct down into these downside support ranges here? The first one from 714 down to about 702.25 on a weekly basis, followed by 681.30, 671.50, which is way below that point. So that's what I'm seeing on there. Until one side breaks, I'm not really getting much of a directional read on the SPY. The QQQ has a very similar picture. I'm just treating this entire area here as a price consolidation, and it can potentially mark a corrective move lower, or it can be a consolidation that can lead to the next impulsive leg higher. So keeping an eye on this week's close. I do want to see what we do here prior to support, what we do around the 12 period moving average. In a trend, price tends to respect that pretty well. So that's my dynamic support or dynamic resistance area. But yeah, just watching the current ceiling on here from 756.65 to 746.75, and the current floor at 713.95, 702.25 on a weekly basis.
So, Chris, I know you obviously are always following price action and you follow it religiously there. When you have an event coming up like an earnings season and such, does that change your mindset at all? Like, price action in August, I always feels a lot stronger than say something in July where you're coming up to a key fundamental round of events, right? So
Right.
I'm just kind of curious as to your mindset going in here. Obviously, you're looking at choppy conditions and 100% see that same thing. So, I'm guessing the tiebreaker, if you will be earnings season.
Hmm.
So what's your approach for reading your charts coming into earnings season for the indices?
Yeah, so a couple things. The foundation is a technical, especially going into earnings. I know that it's a volatility event. It's gonna create a lot of volatility. As far as the levels that I'm monitoring, I'm still monitoring the same levels, but I do tend to lean on the larger levels, the daily levels, the weekly levels, the monthly levels. I know that that volatility can potentially blow through the smaller intraday levels, the 30 minutes to 60 minutes. But yeah, I mean, I'm forming my bias or my opinion the current ceiling, current floor off of the technicals, and then I'm seeing how price reacts as it goes into earnings. And typically, I'm not really buying a stock or holding a stock. If I have a position on and I have a comfortable buffer going into earnings, I have no problem holding that. But I typically don't like to put on trades a few days before earnings because anything can happen. It could gap through support, gap through resistance, anything can happen. But long story short, I'm aware of the volatility that it creates. I lean on the larger levels, daily, weekly, monthly, and I just kind of use those levels to frame out my expectations. And then whenever the earnings do come out, I see how price reacts around those levels because oftentimes you do see price gapping lower and reacting off of a weekly support range or a monthly support range. That happens often. So I have those mapped out. If the first layer breaks, I'm looking at the second layer just to see price action, how it reacts off of those areas.
Okay. With this consolidating pattern going on and in the middle of no man's land, are you leaning in one direction or the other? Do you have a probability of, I don't know, say 60-40 bull versus bear from your chart reading?
It's tough. I mean, based off of the monthly candle, this was a bullish looking candle because we did close in the upper end of the range, but we also closed inside the prior month's range. Being at resistance, I give the resistance range the benefit of the doubt until the range breaks. So going into earnings, since we're trading here at resistance, I kind of want to lean to the short side, a more bearish tone. But again, I'll be watching price to see what we do here within this area, especially on the daily charts, especially on those 60-minute time frames. And if we do get a decisive break above that 756.70 level, that'll shift my bias.
Okay. Let's roll over now to the Qs. I know you've been focusing a lot on tech, and we will be going through the different sectors in a bit, but Qs overall, what's your read on that chart? I got them sitting, trying to hold the 50-day moving average myself here.
Yeah, so I have it on the 12-period moving average, which is intersecting through the support range here from 701.65, 686.35. And the current ceiling here is 748.65, 738.10. We're in a range, just like the SPY, we're in a range over here. We did put in two highs over here so far with momentum kind of deteriorating. Doesn't mean it's gonna necessarily fall down and roll over. That momentum could pick up. But I'm just kind of, I want to see what price does between these two levels over here. Above support, above this range, on a daily basis, I'd like to see price begin making new highs over here. Just going down to a smaller time frame, I'd like to see price breaking above today's high tomorrow in order to kind of confirm to me that the support range is holding. But we're pretty much in a sideways range until one of these areas break. If we break above 748.65, that's going to create a higher high and potentially lead to that next impulsive leg higher. And if we break beneath the support range here, it's going to make a lower low and potentially lead to a corrective move lower.
Okay. Let's move on next to the diamonds, the DIA.
Yeah, DIA looks good. DIA is in a pretty solid uptrend over here. We have support at 513.05, 500, followed by 495.80, 487 just below that. Pretty strong uptrend. You could also I always look at the slope of price action along with the slope of the moving average. Usually when that moving average is moving sideways, it just indicates that there isn't much activity in the market, but we are steadily climbing higher over here. what I'd like to see is, without being Captain Obvious, I mean, there's no price resistance over here besides this week's high at 532.50. So a break either this week or next week above this 532.55 level will likely lead to further new highs. And as another scenario, if we were to break beneath this week's lows next week, that's going to likely lead to a corrective move lower into this overall support range here from 513 down to about 500. And I could probably really quickly refine that area a little bit. It's a wider weekly range, but I could refine it down into a little bit more of a manageable range here from 509.35, 500. So that's what I'm seeing on the Dow, on the diamonds.
Okay, just we'll ask you for individual tickers at the moment, but was there any stocks in the Dow? Because obviously there's 500 stocks in the S&P, right, and 100 in the Nasdaq, only 30 in the Dow. Was there any that were jumping off that you think are the key driver for it?
You know what? I don't look into the Dow too much. I'm familiar with some of the names in there. Let me take a look.
Okay.
I break down the SPY QQQ.
We can circle back. I didn't want to throw you
Yeah,
on the spot. I just didn't
sure.
know if you happened to be following that. I know we're just kind of covering the overall, but we'll circle back to that. I don't want to throw you on the spot and have you start going through 30 charts here.
Sure, sure.
But well, how about the Russell here, the IWM?
Yeah, I think that's a pretty similar looking chart as well. So weekly support down at very similar structure as the DIA, as a Dow. Let me take a look at the monthly real quick. Yeah, so we have downside support here at 279.25, 270.35, followed by this lower range here at 251.25, 238.70. And I'm sure if we drill into it on a daily basis, we'll find this smaller level within this area here as well. Right around there at 263 down to about 260. The same situation here. There's really no price resistance besides this last week's high at 302.72. This week or the following week, if we were to break above that 302.72, that's likely going to lead to a continuation higher, further all-time highs, and vice versa. If we were to break beneath, we're trading within last week's range right now, so we have an inside bar developing at the moment, which kind of indicates indecision, especially when you see it on the longer term charts. But the week hasn't closed just yet. We're just Tuesday. If we were to get a break below 294.70, I see that as a potential for price to begin a corrective move lower, test this dynamic support range, the 12-period moving average at around 287.25, followed by the lower support ranges, 279.25, 270.35.
All right, Chris, if you're looking at the four indices, give me a ranking 1 through 4 in terms of technical strength.
Technical strength, I'd give the Dow number 1, and I'd give the Russell number 2, only because we're trading within last week's range. This week we haven't broken out of it just yet. And then on the SPY QQQ, SPY would be 3rd, and because we are trading up into resistance, a little higher than the QQQ, while QQQ has been the laggard, and it's down in this overall support range. So QQQ would be number 4.
Okay, so with that mindset, then if all of a sudden we had a big either breakout or breakdown, is your mindset kind of, okay, I'm going to look at some of the strongest names in the Dow to get long if we break out, or if we're breaking down, I'm going to look at some of the weakest names in the NASDAQ to get short. Do you kind of operate that way or not really?
Yeah, I do. I actually, on my platform, I have the 13-week relative strength up. So whenever a index is pushing higher or lower, if it's pushing higher in this case, I'd want to get long the strongest stocks. The only downside in doing that, I like to buy pullbacks. And sometimes whenever you're going after the strongest names on those lists, they've moved up quite a bit, and at times you're not seeing that pullback. So I'd like to use that framework as a foundation, and I like to go down that list starting from the strongest on the upside and try to see what's giving me the best pullback to potentially join to the upside, and vice versa logic on the downside.
Okay. Let's take a look at some of the other market elements here in the backdrop, starting with the VIX, Chris. We've seen volatility being suppressed here for the
Hmm.
most part. I got the VIX trade at 1555. I get that. That's the lowest level. I guess yesterday at 1556 was the lowest 1553, but you got to go all the way back to June 4th, the last time I was trading that low.
Hmm.
Obviously, not a lot of care about the rise in oil that we saw earlier or any of the stories around Iran shooting off a few more rockets here. You got NATO in the backdrop naturally. So, what are you watching on VIX here? And is there any pattern that you're noticing? Is this getting into that short vol time frame like we saw back in 2022, 2023 with the steady rise?
Yeah, it can be. It all depends on what we do whenever we bounce higher. We are coming into this overall support range here from 1735 down to about 1590 weekly support range, which price has been pretty much holding and respecting since about December 2024. So just over probably about a year and a half or so. So I am watching that, and I'm not getting long the UVXY per se over here, but I do want to see how price reacts over here. Um, how I treat this is price is now testing support. So we're at this overall weekly support range from 1735, 1590. On a weekly basis, if I'm trading the weekly time frame, I'd like to see a potential break above this week's high next week at $18 to indicate a potential run higher. But even if we do get that run higher, we've built some pretty strong resistance over here that we'd have to overcome. It's pretty choppy. I'm going to actually cut through that wick and just go. Yeah, actually don't even need to cut through that wick, but we have to clear through this resistance range here at 20 down to about 1850 to have a meaningful move higher. Above that, there's another layer right over here from 2175, 2085. So we are coming into a pretty strong area of support over here, but we also do have pretty strong layers of resistance overhead that price would need to chew through in order to have a meaningful move to the upside. A break above 20 would get it above that 12 period moving average, and would get it testing slightly higher into 2175, 2085. And there's another range right below at around 14 flat down to about 1290 that I'm keeping an eye on. So that's what I'm pretty much seeing on the VIX.
All right. Moving on, let's take a look at the 10-year yield here, Chris.
Yeah.
We got that. It had broken above 450 here on the session. Recently, it had dipped down to that 446 area. So following a little bit of a lighter jobs number, but right back up here. And we've seen signs of inflation data coming in a little bit over the last few days. Certainly, some of the international data on inflation has been softer. We had the food prices from the New York Fed survey come in a little bit, or the New York Fed supply chain showing some easing pressure there. The FAO food price index came in a little bit lighter. We're going to have Manheim, I think, tomorrow, CPI and everything all last week, or all next week. Jobs numbers were, of course, a little bit lighter, but not really seeing anybody abandoning interest rates here at the moment. That's for sure.
Mhm.
With the 10-year now up at that 452 area, there will be a 10-year auction going off tomorrow. The 3-year auction here in the States today was generally uneventful. It was the strongest auction that we've seen, but saw solid enough demand and 2.6 times cover compared to the 2.63 average. Went off a little bit lower than the when issued, and the indirect bids were very strong, so that's good there. But yields continue to remain elevated. So what are you seeing on the charts there for the 10-year?
Yeah, so I think we were talking about this last time too. Price has been in this overall sideways range here since 2023. Beginning on February 2026 or earlier this year, price put in this leg higher, broke through this swing high over here from January 2026, earlier in the year, and put in a higher low. So this is a controlling swing low that I'm paying attention to. Last week, whenever we were looking at this, price was coming down pretty sharply into this support range here from 440 down to about 430, and there's another layer just beneath it. There's really not much of a gap in between from 430 down to about 423. So we're seeing some buying pressure coming in off of this area. We're currently taking out last week's high. We're about to take out that prior candle's high as well. Now, I'm watching this minor area here, this swing high, which led to this swing high here from at 456 that formed early June, that led to this move lower. If we were to break above that 455, 456 level, that indicates that we're likely going to trade deeper into this range here at 465, 457. Especially given the fact that we've tested it once, twice, and on the third touch, we actually broke through it, but then kind of moved back in. It tested, rejected, and moved back in. So a break above this 456, I'm seeing that it's likely going to test deeper into this range and potentially break above that 465 area. A break above that 465 area is pretty significant. It's going to open the door for this range here, $5 or 5 down to about 485. And actually the more significant range is that one over there, because if we were to break above 5, we'll be breaking above a multi-year consolidation range, which would imply higher rates. That's pretty much what I'm seeing from a technical standpoint on the 10-year.
Okay. Moving on next.
I just want to
Sure.
quickly point this out as well, Gavin. So looking at it on a monthly basis, just zooming out, we've had this leg higher here from August 2020. We've been consolidating here since about 2023, call it 2022, right around that range. So markets either correct through price or they correct through time. So we could treat this entire range over here as a corrective move. And a break above 5 is like I was mentioning, it's likely going to lead to that potential impulsive leg higher, whereas a turn lower and break below probably about around 360 is likely going to lead to another leg, another macro, another bigger time frame leg lower. So that's pretty much what I'm seeing on the 10-year when I zoom out.
All right. Let's take a look, Chris, at gold with the GLD. It's bounced recently here, running into its 20-day moving average, and running out of a little steam on that bounce around the 380 area. What are you watching for gold?
Yeah, so we did come into this weekly trend is lower. We did come into this support range here from around 374 down to about 360. And we took out last week's high, but we haven't closed above it. So I want to see how this candle is going to close this week. If we do have a bullish looking candle, which closes above that high, it's likely going to move closer and test this 12-period moving average around 399. Which lines up with this swing high over here. If you take a look into that swing high, I'm pretty sure on a daily basis there's going to be some resistance. That resistance layer coming in at around 402 down to about 395.80. That's the current ceiling that I'm seeing on GLD. In order for this downtrend, this weekly downtrend, what did I do? In order for that weekly downtrend to terminate, and price have a shot at trending higher, price would need to break above 402. If we do that, it's likely going to terminate this weekly downtrend. It's not going to shift it into an uptrend just yet. We would need to see consecutive higher lows forming. But a break above that 402 is going to open the door for price to begin moving into this bigger range here from 437, 417.25.
All right. Let's see. So moving on next here, let's take a look at oil here, Chris, the USO. As we said, obviously been pulling back as geopolitical tensions have eased. We have seen it bottom a little bit since that MOU has been signed. A little bit of buy the rumor. I don't want to say sell the news, but hold on. I follow the news, I guess we could say. What are you seeing in oil right now?
Okay, so oil's a little bit of a difficult read. I was talking about this yesterday. We're trading within this overall wick here. Actually, that makes it pretty, you can't see it. Okay, so this candle here from the week of Monday, the week of March 9th, 2026. So we're trading within that wick. There really isn't any clear-cut weekly support, but if I were to drill into that wick, there is a daily area of support here. That price is currently seeing some buying pressure off of, which comes in at around 108 to 101. So I'm keeping an eye on that. And if I go up to a monthly chart, again, I'm doing this since I'm not seeing any clear-cut ranges on the weekly chart to lean on. If I go over to a monthly chart, we're literally sitting on that 12-period moving average. And I'm also going to add another layer to it. I don't factor this into my day-to-day analysis, but it is something that I will pay attention to time. If we draw the Fibonacci retracement tool from the March 2023 lows up to this year's high, we're literally trading on a monthly basis. We're trading on top of that 12-period moving average within daily support. And we're also trading at that 50% mark, which tends to be, which can potentially be pretty strong support or resistance, especially when it's lining up with other factors. And also, we're sitting on these prior highs right over here as well. So keeping an eye on that. There's several confluences that are kind of coming in at this range. But now getting down into the technicals, a break above last week's high at 108.15 is likely going to open the door for a run higher to test the 121.50, 114.85 resistance range, which lines up with that 12-period moving average. And if we get in there, chew through that, that's likely going to flip this weekly trend higher. I'm sure we're going to form some higher lows as we do that, and going to open the door for us to trade into the 114.40, 133 resistance range above. So current floor is a 108, 101 level. Current ceiling is a 121.50, 114.85.
Okay. Moving on here, Chris. And so we talked about most of the majors. We didn't touch this one last time, Chris. I don't know what ETF you want to look at, but Bitcoin. I got the BITO up on my own charts. I don't know if there's one that you prefer there, but you got any thoughts on Bitcoin?
Yeah, so talked about this a little bit over the last few weeks as well. Again, this is not something that I factor into my day-to-day analysis, but we do have a potential head and shoulders forming over here on Bitcoin. But aside from that bigger picture, I'm actually going to refine this range down over here. We did test support, weekly support at 57,310 down to 52,545. And we're now testing that current ceiling at 67,250 down to 63,25. If we hold beneath this range, it's likely going to continue this trend that been seeing on Bitcoin, this weekly trend. It's likely going to continue it lower. It's going to indicate that this lower high is holding, forming resistance, which is likely going to continue the trend lower and potentially lead to another test of this 57,310, 52,545 range, support range below. Now, on the flip side, if we were to get a decisive break above 67,250, along with that 12 period moving average, it's going to terminate this recent weekly trend that we've been in. In order to flip into an uptrend, we need to see higher lows forming, but that's going to open the door for a potential run into this next resistance range here, which lines up with this swing high at lower swing high at 82,835 down to 76,975 on a long-term weekly basis.
All right. Let's take a look through then at the different sectors real quick. We are going into earnings, just kind of see what's rotating in there, what's happening in the backdrop. We'll start off with the XLK, Chris. I know you've been talking a lot about that, and then we'll just take a quick gander at the SMH after the XLK. Obviously an important component, but looks like it's kind of trending a little lower here in the XLK, although it is fighting to hold that 50-day moving average.
Yeah, it's a very similar. I think the XLK has been the primary driver of the market recently. It makes up about 40% of the index of the S&P. It has a very, very similar technical structure as the QQQ. We're sitting on support here at 176.25, 170.85 with that 12 period moving average intersecting through it. I'd like to see a potential break. It's pretty far away in this case because the highs of this week are pretty far away. But my process, I'd like to see a break above 185.70 for a potential indication that this support range is holding and we are moving higher. However, we do have to break through this resistance range over here, which is forming, it formed two consecutive highs over here. We'd have to chew through this 194.30, 190.35 resistance range in order to continue making new all-time highs, continue that other, potentially create another impulsive leg higher. Otherwise, if we dig deeper into support, break below 170.80, it's likely going to open the door for a deeper correction into the 161.85, 156.15 area. And below that, on a weekly basis, there really isn't much support until we get down to this range here. But I'm sure if we dig into it on a daily chart, there's some support that we can find within these bars over here as well, probably around the swing high.
Okay.
So that's what I'm seeing.
And let's take a look at the SMH then.
Yeah. All right, so SMH, very similar picture. Last week we tested this resistance range, 671.80, 643.50, held it, and are now sitting on top of support here at a 576.30, 527.80. Let me refine that. It's a pretty wide range. There's two layers of support here within that overall weekly area. The first one from 580.75 to 554, followed by this range here at 543.95, 527.85. So price would have to potentially break through this overall area, two daily ranges within this weekly range, in order for a move lower. But we do have support here as well, right there at 509.80 down to about 483.25. So that's pretty much what I'm seeing on there. Just like the XLK, I'd like to see a break above this week's high at 681.20 for a potential continuation of this uptrend And if we do that, we still have to fight and contend with this overall resistance range at 671.85, 643.50. A decisive break above that is likely going to open the door for a potential impulsive leg higher, continuation higher.
All right. Next up, let's take a look at the XLC trading at about 31 times forward PE. About 30% of this ETF is Google and Meta, of course, so they certainly dominate it. Take-Two, Live Nation, EchoStar actually is a big component here, about 5%, Disney, Netflix. So what are you looking at in the XLC, Chris?
So XLC Communications, we've been in this overall sideways range since about September 2025 on a weekly basis. We are attempting to reverse lower. Price is attempting to trend lower over here. We did put in this slightly lower high at 118.20, 115.40 and formed that resistance range as we moved lower, followed by this range here, which price is now testing at 113 down to about 111.50. If this range holds, if price holds beneath this resistance range, turns lower, it's likely going to continue this weekly trend that we've been seeing. It's likely going to lead to another test into the 107.55, 105.55 range, and a break below that is going to lead to another lower high right over here and potentially test the 101.40 to 99.60 support range below. Conversely, if we were to break higher, break above 113, we're likely going to test the top of this range, this overall swing high at 118.20, 115.50. For a continuation higher, I'd like to see a break, a decisive break above the 118.50 level.
All right, next up, we will take a look at the XLRE real estate, another expensive one, trading about 30 times forward PE. Some of the bigger holdings in this: Well Tower, WELL, Prologis, PLD, Equinox, EQIX, American Tower Corp, Simon Property Group in there too, as well as Digital Realty, DLR, the Digital Data Center REIT. How do you see the XLRE playing out here, Chris?
Okay, so we've been seeing a bit of a trend higher over here, and now we've been kind of consolidating, moving in the sideways range since about April. We are coming into this overall resistance range here at 45.85, 44.70. I do like that we're kind of building a base beneath that range that kind of indicates that, hey, this may have the launcher, the base, to potentially break higher break above resistance. So I'd like to see a break above 45.85 to clear this overall resistance range from August 2022. A break above that is likely going to open the door for price to begin moving into this range here at 49.95, 48.65. There will definitely be some pauses on the way. It's not going to straight shot into that, but it's going to open the door for a test into the 49.95, 48.65 range. I'm not really seeing much clear-cut support over here at these swing lows, but I'm sure if we take a look at a daily chart, we'll see some support over there within that weekly area. And yeah, we have a couple layers of support. The first one coming in at 44.02, 43.50, which is overlapping with the swing low of this consolidation area at 43.50 down to 43.10. So that's pretty much what I'm seeing on the XLRE. A break beneath this, a break below. If this resistance range were to hold and price were to turn lower, a break below 53.10 would open the door for price to begin moving toward these lows here at around 41.50, followed by support around 40.50.
All right, next up we got industrials, the XLI. Top holdings in here include Caterpillar, GE Veranova, GE, Veranova, and Caterpillar certainly been volatile names. RTX, I got the long out in that. Boeing, Union Pacific, Eaton, Deere, Uber falls in the top 10. But Chris, XLI, it had been looking pretty good, but just pulled back here below the 9-day moving average. Any thoughts on that?
Yeah, we're forming an outside bar this week. We do have some support that's formed right over here, right above that 12-period moving average at 181.20 to 177.25. Beneath that range, we have another layer here at 173.25, 160.10. As long as we hold above this 168.10 swing low, this uptrend stays intact. We may get a corrective move lower over here into support, but above this swing high, above 168.10, that keeps above that controlling swing low, keeps the uptrend intact. And just like the indices, just like the Dow, continuation higher, I'd like to see a break above this week's candle at 186.45. Whereas I would normally say a break beneath last week's candle would likely lead to a corrective move lower, but in this case we have support beneath it here at 181.20, 177.25. So I'd like to see how price reacts around that range, and a break below that is likely going to test this second layer here from 173.25, 168.10.
All right, next up we got the consumer discretionary ETF, which really is Amazon and Tesla. It's 47%. We do have Home Depot in here at 5%. TJX, McDonald's is another top hold in there. But the XLY, Chris, sitting right on that 200-day, 50-day moving average convergence. Looks like it's getting ready to pop one direction or the other to me. What's your thoughts on it?
Yeah, I think so too. It's moving in an overall sideways range here. We do have resistance here at 125.10, 122.30, where we reacted from in May and also in April. One thing about this that makes me lean slightly toward the downside is we formed two lower highs beneath this high over here. So we're in an overall range, tough to read. We are sitting at resistance at 119.50, 117.50, 117.15. If this level holds and we break below last week's low at 116.10, we're likely going to test these lows here at around 113.15. We'll probably find some daily areas there. Really quickly, we have this little pocket from 113.45, 112. If this resistance range holds, I see price moving down and testing the 113.15, 112 range. A break below 112 will lead to a test of the 108.15, 105.20. If we do break above 119.50, that's going to open the door for another test of this 125, 122.30 range. And I'd like to see how price, depending on the close, depending on the shape of the candle, I'd like to see how price reacts around this range. Are we going to test it for a fourth time, turn lower, or do we have the power to chew through it, break higher, and pretty much make new highs from here? So that's pretty much what I'm seeing on that.
All right, how about the staples, XLP?
XLP. All right. We're consolidating here within. So we have, just zooming way out, we have support here at 78.15, 76.50, way below. We have another layer of support here at 82.35, 80.50, which is controlling the lower end of this overall sideways range. We have resistance here at 90.15, 87.90, and we're consolidating over here. A break above this high is likely going to test this range here at 90.15 down to about 87.90. A break beneath 80.50 is going to test the 78.15, 76.50. Really don't have much of a read on this at the moment. Just kind of consolidating here within this overall range.
Okay. Next up, arguably the strongest sector over the last couple of weeks, but healthcare, the XLV. Top components in this include Lilly, Johnson and Johnson, AbbVie. Those three alone make up about 33% of that ETF UNH, the top holding. And go look at any of these charts and you'll understand why the XLV is up. But what's your thoughts on healthcare going into this earnings season, Chris?
Yeah, pretty good looking chart. We can pull back, but a pretty healthy looking. I'm not going to say it's a very, very strong uptrend, but we do have an uptrend developing over here. We do have support here at 153.70 down to about 148.80, followed by the second layer here at 145.10, 141.95. There is no price resistance overhead besides this week's high at 165.60. So I'd like to see this week or next week, I'd like to see a break above 165.60 for a potential continuation higher. I do like that we are forming a base over here. This base can be the trigger point for a potential leg higher. It could also be a potential trigger point for a corrective move lower. So that being said, I do like that it's sitting on top of these swing highs over here. But nonetheless, these swing highs right over there. But nonetheless, if we were to get a break beneath this week's low next week, it's likely going to lead to a corrective move lower in the context of this uptrend, likely down toward the 12 period moving average around 155, which is sitting right above support at 153.70, 148.80.
All right. Next up, we got utilities, XLU. Recently pulled back to test the 200-day moving average, held it pretty firmly. Kind of curious as to your thoughts around the price action around that 46.30 area, Chris.
46.30. Let me take a look at it.
Yeah, it looks like that was the prior high back in late June, and then they tried to rally it up to it today before seeing a bit of a pullback.
Yeah, so we did put in this weekly pin candle over here. Pretty strong closing, not a strong closing candle, but that selling pressure was overcome at support right over here. In this, we have a small pocket of support at 44.75, 44.20, followed by this layer here at 43.35, 42.55. The current ceiling on it is pretty much these highs over here. This swing high here, you could even take that higher into that area. But I think if prices were to break above, dig deeper into resistance and start heading toward the upper end of this range, it's likely going to make new highs from here. So current ceiling that I'm watching is the 47.70, 46.35 range. As resistance, a break above that would likely lead to further new highs. And besides that, we have two layers of support at 44.75, 44.20. We've been moving higher, but now it's kind of taking a rest over here, consolidating and trying to figure out that next move. Are we going to put in that leg higher or put in that leg lower, which is pretty much what we're seeing on the SPY QQQ as well.
All right, then we got financials, obviously, just about a week away from getting, actually 8 week away from getting some of the majors in there. The XLF, Berkshire, one of the largest holdings. This has been making a nice move. A lot of rumors about them replacing Nike in the Dow. We got JP Morgan, Visa, MasterCard. They've been on a tear. American Express as well. Bank of America, Goldman, Wells Fargo are all reporting next week. Morgan Stanley, Citigroup. So pretty much the entire XLF more or less is reporting next week. So what's your thoughts on the XLF on this breakout?
Yeah, so looking at a monthly time frame, we do have a pretty bullish candle that's forming. The month, we're still a few weeks away from closing this candle, but as of now, pretty bullish looking candle. We are coming into these highs over here, which were resistance at in January, early January. And so far this week, we tested slightly above it, and so far we've rejected and have moved lower into this range. I do like how this weekly candle dug deep into this resistance range. What I'd like to see is a break above this week's high next week or this week at 56.60 for a continuation higher. Whereas if we were to break beneath last week's low or this week's low at 55.60, it's likely going to lead to a corrective move lower into this weekly support range here at 53.75, 53.20, which is lined up with that 12 period moving average, 12 weekly moving average. And right beneath that range, should we break through 53.20, we have another layer at 52 down to about 50.50 that I'm keeping an eye on.
All right. Next up, Chris, the XLB. Taking a look at materials here. Some of the top holdings that we have in the XLB.
All right, so
includes Lind, Newmont Mining, Freeport McMoran, Corteva's in there. Sherwin-Williams falls in that, Vulcan Materials. But what's your thoughts on XLB here, Chris?
All right, so XLB is sitting on top of these monthly swing highs from October 2024. We're trending higher. Price is now taking a breather over here, moving sideways. Current ceiling, it seems like it's trying to decide its next move as well. The current ceiling comes in at 53.75, 52.50 as a layer of resistance. Let me take this blue box out so it's not too many things on the chart. We have a layer of support here at 50.35, 48.90. Again, we're kind of in this overall range over here. A break below 48.90 would make it's gonna test this lower end over here. It's not gonna put in a lower high. It's gonna test this range, this support range here on a daily basis around those swing lows at 47.65. So I have 50.35 support at 48.90, 47.65, 46.75 is a second layer of support. Price has to break above 53.75 to continue higher, and it's pretty much in a range. It's trying to figure out, it's consolidating, trying to figure out, is it going to put in that next leg higher or break beneath this range and begin moving lower. But this chart is a pretty good looking chart. There's pretty significant layers of support beneath this range here as well, 45.60, 44.70 and below.
All right, and the last one, and right on time, we're getting a nice headline coming from Iran here. Well, coming from the U.S. on Iran, and we talked earlier about the market seemingly not having much of a care in the world, with Iran shooting at two ships here. But it would appear the United States does have a care in the world about that, as we are getting some headlines about a possible response coming from the U.S. So something that we definitely want to keep an eye out on. But I myself, I am a fan of some of these energy plays here. I took a long in the OIH. I know you follow SLB a lot, Chris. Recently bounced off the 200-day moving average. It's like 40% of the OIH, I believe. But energy here, seeing a pop towards the end of the session, up 2.5% on the day. And we're kind of talking about it with oil. It just seems like there's a little complacency in there. So what's your thoughts on the XLE chart?
Yeah, I like this chart. I mean, it's a very similar looking picture as USO. If I'm drawing that Fibonacci, if I'm using the Fibonacci retracement tool and I'm going down from the October 2025 lows to the current high, this year's high at around 64, we are bouncing off of that 50% point. But even if I were to take this tool off and just take a look at the structure that's forming over here, if this candle closes the way it's closing right now at the end of the week, we are potentially forming support here at 54 down to about 52.65. And if you do take a look at a lot of the individual components, Schlumberger, ExxonMobil, CVX, they have pretty similar looking charts. If this range holds and we were to drive higher, we're likely going to test this dynamics resistance range here, this moving average at around 55.60. But above that, there's really not much to stop it from heading higher into the 59, 57.50 resistance range above.
All right. Let's see. That takes us through all the different sectors. I think that's going to do it for us today. But Chris, did you have anything to add before we let you go at the moment?
Yeah, no, nothing to add. I do like how XLE is shaping up. I've been keeping an eye on some of those names as well, commenting about them as well. So I'll continue to keep an eye on those. Obviously, let's see where how these war headlines develop, because it could create some buying pressure around oil and these energy names.
Yeah. So, hold on, quick. All right. Oops, sorry about that, Chris. But yeah, so okay, well, with that then, we will end today's show. Chris, always a pleasure to have you on. Like I said, we're going to be doing this overall look here. We're going to be doing it on different time frames so it doesn't get overly repetitive. And like I said, the Thursday show, that's going to be looking at a little bit more individual stocks. So, you'll know when it's coming up if there's a name that you're going to want us to look at. Certainly we'll be taking a close look at some of the upcoming earnings and everything. But Chris, always great to have you on here and get your perspective and your read of the charts to kind of help provide everybody on a sense of where we are. So with that, I'll let you get going and back to your trading, and I will do the same.
All right, guys. Thank you, Gavin. Thank you, guys.
Thank you.